All right, hey everybody, this is our video newsletter. And first of all, I hope you had a great Christmas and a happy New Year. And I hope this year will bring us lots of money and other good fortunes. But I want to address some things that have been going on. We've had a newsletter issue. We were sending them out every day. It was a new feature put out by the maker of our website. Our website is hosted by Wix. It's the platform that I use. Very easy to use, by the way. And they rolled out a new platform that allowed us to send newsletters and allow people to subscribe. And they let us use it for months without telling us that at some point in time they were going to start charging for that service. And by charging, I mean charging an arm and a lower appendage. So I quit using them and tried to roll over to other platforms. Anything that worked pretty good was very, very costly, and I'm not at the point yet where I want to expend that kind of money to send out a daily newsletter. So what we're going to do is roll this down to a weekend review type newsletter. Now, I would have sent that out over the weekend and let you know that, but I've had some changes going on around my own home, and that has put a very busy schedule over this past weekend, so I apologize. And I would have got it out earlier before the market actually opened today, but ran into computer problems when my kids spilt something on my keyboards, and my keyboard didn't function, and had to figure out another way around that, i.e. go to the store and buy something. So let's go ahead and talk about the markets real quick, what happened over the holidays. You can see as we look at the S&P 500 here on the daily chart, we have we had a major correction. Well, I don't say a major correction. We had a pretty good correction. A very serious bounce back. As soon as we hit resistance, we went back down, and when we went back down, we did not bounce off to 50. We looked like we were going to bounce off to 50, but then we didn't. We went all the way down to the 125-day moving average, we bounced back up off of that, came back up above the 50, and then turned immediately back around, and today we have bounced off our 75-day moving average. What does all that mean? Well, if this was a patient on an EKG machine, I would say this doesn't look good. I really do believe, and I have believed for a while, but this is the first actual physical evidence that we've seen of it, and as far as charting is concerned, that the S&P 500 and the market in general is on its last legs. That we're due for a major, a 20-point or so correction on the market. Those are normal processes that happen periodically, and we are overdue for one. And I believe that the market is actually in its final phases of doing so. If I were just going to look at the humps, the peaks and the valleys of this particular S&P 500 chart on the daily chart, I would say that it's starting to look like what we call a megaphone topper, or what I like to call a sideways tornado, where the wiggle on the left-hand side of the screen is larger than the wiggle on the right-hand side of the screen, and it keeps getting smaller and smaller until it breaks. And when it breaks, it usually always breaks for down. I think that's what we're beginning to see, because the 50-day moving average no longer means anything for the S&P 500, and for that to happen is major. It's okay to break below the 50-day moving average periodically. That's healthy. That's a part of the normal process. But to do it, to do it twice within a 2-week period of time is a major issue. So. And we're below it again. So actually, I guess you could say it's the third time that we're below the moving day average. The S&P looks like it's turning. So I believe we're getting all the warning signs necessary for a major correction down. And hopefully, I'm going to risk being late. I'd rather be late than early and it costs me an arm load. But I want to try to wait and position myself on a longer term put on SPY, which is the ETF based on the S&P 500, mirrors its movements, pretty closely. And if I can do that on a longer term, and when I say longer term, I mean like 6 months type thing, I believe that I have a much better chance of being right. If I buy that and within, say, 2 or 3 weeks we have our major correction, then I'm going to make out like a freaking bandit. So I'm paying attention to that, and hopefully I make that. If I miss that and we undergo through this correction, we'll buy it on the bounce off the bottom. And like we have said for so long, there will be no way that you can get that wrong. It'll be like throwing a dart at a dartboard, and it just always hits bullseye. Any stock that you choose to buy at that point was pretty much going to move up unless they just have some really bad news on the company. So I believe that's where we are. For you guys that have signed up for the instant alert programs, you can start to pay attention to that really, really closely, because I believe I'm very, very close to start calling some puts. We'll see what happens. We'll talk to you at the end of the week, but if you're on the instant alert programs, obviously check your text messages, because there's a really good chance you're going to see something this week. Thanks. Peace out. Bye.